Good day, everyone. My name is David Williams, Executive Director of the International Association for Energy Economics. It gives me great pleasure to welcome you to today's webinar entitled Environmental Impacts of Digital Currency. We're grateful to our friends at the Turkish Association for Energy Economics for today's timely discussion. First, a little bit about the International Association for Energy Economics. We are the largest association specializing in the field of energy economics and provide a forum for the exchange of ideas, experience, and issues among professionals interested in the field. The organization produces 2 professional journals, a newsletter, and holds conferences and virtual presentations, along with a host of other products and services that you can find at our website at www.iaee.org. If you're not already a member of the association, we welcome you to join. A few housekeeping matters in regard to today's webinar before I hand things over to our moderator. First, this webinar is recorded for those that cannot participate in today's live event. If you have questions for our panelists, please click the Q&A button at the bottom of your Zoom window to type your question. We've allocated sufficient time at the end of this webinar to address your questions. Now it's my great pleasure to introduce you to our moderator and speaker, Jim Avci, Professor of Civil Engineering at Boğaziçi University in Istanbul. Jim, over to you.
Thank you. Thank you very much. Welcome to our meeting. Our topic will be environmental impacts of Bitcoin, and I'm here to present the subject with my friend Görkem Üçtüğ, who is an associate professor at İzmir University of Economics Faculty of Engineering, and I'm the president of TRAEE. And I will briefly talk about the outline of our presentation, and I'll hand this over to Görkem. So why is this, what was our motivation to look at that? And of course, Bitcoin is a very, let's say, hot topic, not only on energy, but also on finance aspects. And my friend Görkem has looked very closely at the life cycle analysis for how to look at the environmental impacts of Bitcoin. And I'm more familiar with the environmental social governance assessment, means that Bitcoin is a commodity, but at one point they will be judged from an ESG point of view. I mean, you do have Bitcoin, that's fine. Let's see what are the strings attached, what is behind or what comes with the use of Bitcoin from an ESG point of view. The results and implications of our assessment will be provided in terms of the carbon footprints of Bitcoin and gold production, critical exchange rate, and after that we'll take questions and answers. So having said this, my friend Görkem, please continue.
Hello, ladies and gentlemen. Good morning, good afternoon, or good evening, depending on wherever you are. Here in Turkey, it's late afternoon. Those of you participating from United States, good morning. Those of you participating from Asia, Eastern Asia, good evening. So I'm very pleased to be here in front of such a distinguished audience. I'd like to thank IAEE for this opportunity to share our work with you. So first, I'd like to mention why we decided to study the cryptocurrency market. I mean, as you all probably know, this market has been steadily increasing in volume. This particular figure, which is taken from a recently published scientific study, shows the total number of cryptocurrencies over the years, and this increase is quite evident. And then the question is, why did we choose to study Bitcoin? Well, there are several cryptocurrencies, under circulation today, but I guess Bitcoin is by far the most popular and the biggest cryptocurrency of all. And if you look at this slide, it shows that it accounts for approximately 30% of the total cryptocurrency market, and that is why we focused specifically on Bitcoin in our analysis. Now, Bitcoin mining is realized by basically solving a very complicated mathematical problem with computer power. Therefore, it consumes a lot of energy. Bitcoin mining is a very energy intensive process. So recently there has been some concerns raised about the environmental impact of Bitcoin. This particular slide shows that if Bitcoin were a country, it would be the 29th country in the world in terms of annual energy consumption, which is significantly high. And as if these concerns were not enough, recently, world famous businessman Elon Musk stated that his company, Tesla, will stop accepting Bitcoin as a valid means of payment because of the high environmental footprint of Bitcoin. Now, I'm going to say at this point that we had decided to work on this issue way before Elon Musk made this announcement, made this statement. So he did not influence us, but I don't think we influenced him either. So it was just a coincidence. On the other hand, not everyone thinks that Bitcoin mining is that impactful. This particular slide argues that compared to other currencies, fiat currencies or gold mining, Bitcoin mining has much lower energy consumption. Now, seeing especially this slide and reading about the entire argument made us think that when people discuss the environmental impacts of currencies, they sort of miss a very crucial point, and that is, what is the functional unit? So for those of you who may not be familiar with the concept of functional unit, I'd like to explain it by giving a very basic example from our daily lives. Here you see two different means of hand drying. On the left-hand side, an automatic hand dryer that you find in public toilets, and then on the right-hand side, you see a paper towel dispenser, again, which you can find in many public toilets. Two entirely different systems. One runs on electricity, one requires paper towels. Probably have very different initial costs, probably have very different operating costs. The inputs are different. So if we want to compare these two from an economic or an environmental point of view, how can we do that? In order to be able to compare two or multiple different things that have the same, that serve the same purpose, we must first define their function and then make the comparison in terms of their functional unit. So a functional unit is a quantified description of the function of a product that serves as the reference basis for all calculations regarding impact assessment. A function may be defined based on different features of the product, such as its performance, aesthetics, technical quality, additional services, costs, etc. So if I answer my previous question regarding the function of the hand dryer, it's obviously very clear. It's the number of hands dried during a given amount of time. However, when it comes to comparing different currencies, the only function that we can assign is the purchasing value. We use these currencies in financial transactions, so their only function is their purchasing value. So when we compare the environmental impacts of Bitcoin or gold or whatever type of currency you can think about, we must make this comparison in terms of the functional unit, that is the value of that currency. Now, at this point, one may ask why we only included Bitcoin and gold in our study. Why didn't we consider, for instance, printed currency? The reason is when we assign the function of the currency as its value, there is absolutely no difference between the environmental impacts of $1 bill and $100 bill, because basically they have more or less the same size, they require more or less the same amount of ink, or even if there are differences, they are very minute. So they would have the same impact, but they have a huge difference in ratio, in value, which means their impact per functional unit would be very, very different from one another, which would not make sense. Therefore, we had to exclude the printed currencies in our analysis and we only focused on Bitcoin and gold. We used a method called life cycle assessment. I have been working on life cycle assessment for quite some time. I have worked on very different topics. I have worked on the life cycle assessment of solar panels, pasta, tomato paste, banana, olive oil, hydroelectric power plants, big data. I mean, you name it. So life cycle assessment, or LCA, can be applied to any service or product to determine its impacts, mostly environmental impacts, but its desired economic and social impacts can also be calculated. And the critical aspect of life cycle assessment is all the stages associated with the life cycle of a product or service must be taken into account. So what are these stages? Raw material acquisition, production, storage if applicable, use or operation, and end-of-life treatment. So in this study, we used a freeware called CCalc, whose main screen you can see in front of you right now. This freeware was developed in the University of Manchester, United Kingdom, and I was lucky enough to be a part of the developing team. I joined them very late and worked very briefly as a tester in that team. So if you are interested in carbon footprint calculations or any other environmental impact calculation, you can basically look it up, download this software and start using it. It's very user-friendly and it has very, it has a lot of different various functions which can help you make different calculations or analyses. So in our life cycle model, we considered the following inputs: electronic components for Bitcoin mining, the electricity required for Bitcoin mining. We obtained this information from the literature. I'm not going to bore you with the details at this point. The material energy input for gold mining, and finally, transportation of gold from the point of mining to the point of sale or processing. And we also studied 4 different locations, because if the concerns are really true, then the environmental impact of Bitcoin is supposed to significantly depend on the location where it's mined, because the electricity of different countries have very different or come from very different resources. Some countries rely heavily on fossil fuels, some countries rely heavily on renewables, some countries such as France rely heavily on nuclear. So depending on the location, the environmental impacts of the electricity and consequently the environmental impacts of Bitcoin would differ. That is why we decided to choose 4 locations. These locations are Turkey, simply because this is where this study has been conducted. Poland, because Poland relies heavily on coal for its electricity supply. Denmark, because Denmark relies heavily on renewables. And finally, France, because it relies heavily on nuclear for its electricity supply. Okay, I'm going to talk a little bit about the results, and I'm going to give the microphone back to Professor Avci so that he can discuss the implications of our results and what can be done, the social governance issues. So as you can see in this slide, no matter where we mine Bitcoin, it would always have a higher carbon footprint per unit value compared to gold. Even if we obtain the entire energy for Bitcoin mining from photovoltaic panels, the environmental impact, the carbon footprint of Bitcoin would still be around 4 times greater than that of gold production. And if we want to calculate the critical exchange rates, basically the lowest value that Bitcoin should have so that it can have a comparable carbon footprint to that of gold is around $200,000. Now, I'm not going to give any spoilers because Professor Avci will continue from this point onwards, but if you follow the cryptocurrency market, if you know the current and the recent prices of Bitcoin, and you can have an idea if such prices are reasonable or not. So I would like to thank all of you for being here today. And now I want to give the floor back to Professor Avci, who will continue.
Okay, thank you, Görkem. So if we go to the next slide, as you know, sustainability is becoming very, very important in our lives. And a lot of companies, a lot of entities, including individual to large corporations, are looking at how sustainable their activities are. And associated with sustainability is our environmental social governance triangle. So first, Görkem was indicating how important the footprint Bitcoin has on the environment, and especially how the energy is generated. So definitely we have climate change considerations. We definitely need to know where this is being impacted, what's the energy efficiency. Because a lot of people just see Bitcoin as an environmental assessment, environmental concern, but then we have the social aspects. In other words, the people who deal with the Bitcoin or the corporations, what are their social, what's the social aspect of the individual or the corporations that deal with Bitcoin? The human rights, the labor standards, health and safety, employee development, supply chain standards. And of course, these are very important because ESG now becomes one of the most important criteria for investment in firms or not to invest in firms. So if you have good ESG record, then it's likely that your performance will be good as well. Of course, governance, where to use these Bitcoins? How open are you with the development, where you use it in your corporate sheets? How transparent are you? And within an entity, what is your code of ethics, bribery and corruption, death penalty, military expenses? So all of a sudden, any activity, including generation of Bitcoin or mining or, I don't know, pipeline construction, they all have to look at not only on the environment, but at this triangle, which is the ESG triangle. Let's look at the next one, Görkem. So because there's a big interest in Bitcoin, people are looking at a closer look, not only Bitcoin, but at the cryptocurrency industrial environmental social governance performance. And this is something relatively new because Bitcoin and other cryptocurrencies are going through some major changes in terms of acceptability, in terms of the amount generated, in terms of how much it's being used, how it's being regulated. It's a very, very new world. And the ESG assessment is also very new. I mean, how good is dealing with cryptocurrency is something that I think companies are struggling with. The world's financial institutions, in other words, people who lend money, manage climate risk and other ESG. So climate risk, if you ask the largest corporations in the world, say, what's the biggest threat? And they say climate change, or measures that are taken to combat climate change will be unsuccessful. 10 years ago, it was, will China's economy continue driving the world economy? Now, everyone's looking at climate change. They're looking at biodiversity. I mean, if you look at recent problems associated with the world, we have biodiversity as a leading cause. So therefore, anything that's big news has to be assessed by the financial institutions through the ESG lens. They have to renew it. They have to review it. If you look at 600 people looked at the recent survey in the fund management industry, 96% expected their firms to increase the prioritization of ESG this year. In other words, this ESG is not a fad, it's a fact of life. Former chief of US Secretaries and Exchange Commission's Office of Internet Information thinks that the Bitcoin ESG concern will certainly dampen institutional investment in crypto. In other words, you need a market. And people may say, well, okay, fine. We know it consumes a lot of energy, but let's look at our aspects. Is this something worth for us to go into or not? or when, maybe not now, but later on. Next, Görkem. So sustainability, of course, we looked at the environmental impact. The LCA showed it has certainly a big environmental impact. But of course, now everyone's looking at the Paris Agreement. We have some dire warnings on where the world's going. We have a major backing of the Paris Agreement. Now we have a new lens in looking at what, well, you know, we use a lot of energy to generate Bitcoins and cryptocurrency. What's its impact on the GHT? We have to look at the social aspects, compliance safeguards, transparency and traceability of the Bitcoin cryptocurrency, and corporate governance. We need to have a transparency of a cryptocurrency market participation governance framework. So all these things now are looking at through these lenses to cryptocurrency. Görkem, next. So the ESG agenda includes both investment risks and opportunities. If you're looking at the European Union, they definitely require climate risk and other environmental factors, in addition to social and governance concerns. And many institutions link ESG to social performance. They do conduct due diligence before they make investments. So any cryptocurrency firm who wants to get access to finance from financial institutions, and as you know, financial institutions lead. If they're willing to lend, things happen. If they're not willing to lend, it's very difficult to move your ideas or product or activities forward. So these guys, these institutions, they need to have a holistically review of its ESG credentials and narrative to consider how it could be like to be publicly presented performance against traditional ESG matrix. You know, people have a pretty good idea what ESG matrix of, let's say, a wind farm or mining or shipping industry, infrastructure, but this cryptocurrency is something new. And if you're looking at financial institutions that want to trade, invest, or custody digital aspects, they will look at ESG's firms' credentials to make sure that they align with the rest of their portfolios. Next. Okay. So, Görkem.
Okay, so if we summarize, as I have mentioned earlier, even if the entire energy for Bitcoin mining comes from photovoltaics, the value of Bitcoin must be at least $196,000 so that it can have a comparable carbon footprint to that of gold. So when you look at the past prices of Bitcoin over the years, you see that the highest price that it has ever reached is around $60,000. So we can say that at least under the current circumstances, Bitcoin looks environmentally hazardous.
Okay. Well, the ESG agenda includes both investment risks and opportunities. We definitely need to have a good idea on the ESG problems that are right now embedded in the cryptocurrency. And I think this ends our discussion. So first, a very good, yes, how to improve this.
There's one final slide. Yeah, thank you. So what can we do, or what could be done in the future to improve this work? Well, I think the best thing that we could have done was to include more impacts in our analysis. What we can do is we could have calculated an environmental footprint by calculating multiple environmental impacts and then assigning weights to them, maybe by referring to expert opinions, and then we would have a weighted average environmental impact. And then we can compare that score of Bitcoin against gold, because we know that gold mining has several environmental impacts, such as land transformation, human toxicity, photochemical smoke formation, which is just a fancy name for air pollution, basically. And we could have also incorporated social governance concerns. They are much harder to quantify, obviously, but as I have mentioned earlier at the beginning of the presentation, life cycle assessment is not only limited to environmental impact analysis. It can involve economic impacts and social impacts if desired. Considering all of these at once and quantifying them is much harder said than done, and it would require much more in-depth analysis, and it would require much more manpower and time. But such a study would be actually very unique. It would be a pioneering study in this field. So we are hoping to work on this issue in the future, and we hope that in the coming months or years, we would be able to share the findings of our work with you, maybe in a conference or in other of these webinar series. So I guess that's all for today. We would like to thank you for your participation, and we hope that you found our presentation interesting. And if you have any questions, we will be happy to answer.
Thank you very much. Thank you, Görkem. So I'll take this back to Rebecca. I think we have some answers, so please, some questions.
Oh, sure. There is a question in the queue that is, have you addressed it? I'm sorry, the one about gold as a commodity. Bitcoin, however, is not only an asset or a commodity, it's also a global payment network. Is it even fair to compare it only to gold?
Shall I take this, Professor
Yes.
Avci?
Yes, Görkem.
Yeah, it's obviously, it doesn't give you the full picture, but it's a beginning. I mean, if you're going to compare Bitcoin against something, then what else could it be? We thought about this a lot. I mean, before we actually started doing the actual work, we gave it a lot of thought. What should be our benchmark? So we know that from certain points of view, gold and Bitcoin have significant differences, but at the end of the day, I mean, we couldn't find a better benchmark to compare Bitcoin against. So if the audience has any suggestions, we would really welcome them, because we are also aware of these issues, but we thought that, I mean, printed currency was not an option. Other cryptocurrencies would not be meaningful. So it has to be, gold is a commodity, but Bitcoin, basically, it requires a concrete input in the form of energy. So it's also a commodity. It's more than a commodity, but it is a commodity. So therefore, we thought it would be the best to compare it against gold. But as I told you, if the audience has better suggestions, I would sincerely welcome them.
Thank you, Görkem.
Jem, do you have anything to add to that, or?
No, I think this is just the beginning of how to get a handle on assessment of Bitcoin and other cryptocurrencies. Görkem is looking at benchmarking and against other aspects, and to see how good or how bad or how different they are. So I think definitely there'll be more ideas against benchmarking. And the other thing, again, ESG performance are beginning trying to grapple with how to, again, benchmark Bitcoin or the cryptocurrencies assessment.
It's definitely a hairy problem. So we have a couple other comments, which is, Bassem Alassi is comparing it to both gold and to something like PayPal or Western Union banking systems, etc. So we have another question from an anonymous attendee that says, why does Denmark have a large carbon footprint since its share of renewables is very high?
May I also take this, Professor Avci?
Yes, of course.
First, I would like to say something to Mr. Alassi. Well, that's a good idea, actually. But PayPal or Western banking system, these are services. We do not perceive Bitcoin as a service. It's a commodity. It's a product. So in life cycle assessment, comparing products against services would not give you too much of an idea, because there are no concrete inputs. And if you start basically creating a life cycle inventory of a service, then basically determining the system boundaries would be very difficult. Where do we stop? I mean, do we consider every possible input for those services? Where do we draw the line? With commodities, it's easier. What is required to obtain that physical commodity? Bitcoin technically is a virtual commodity. It's not a 3D object basically, but it is a commodity. So that is why we thought gold would be a better idea. Regarding the question of the anonymous attendee, you must understand that carbon footprint also considers what we call indirect emissions in addition to direct emissions. Renewable energy, especially wind or hydroelectricity, although it has they have zero direct emission, they have considerable amounts of indirect emission. For instance, the energy required for the production of the concrete that goes into the wind tower or the dams for the hydroelectricity power plant, it has embedded footprint, as we call it, or indirect footprint. So that is why it's not very surprising to us to find that Denmark turned out to have a high, at least higher than that of France, for instance, when it comes to carbon footprint. That was quite expected. And one more thing, renewable energy, although from a direct emission point of view is very clean, from a life cycle point of view, it has certain issues, because when we define the impacts as their life cycles, or in terms of their life cycles, I'm sorry, we define the impact as the amount of energy divided, the amount of emission divided by the amount of energy generated. Renewable systems have low capacity factors. A nuclear power plant can have gigawatts of installed power and can operate for 90% of the year with a capacity factor of 0.9. The best wind turbine would have a capacity factor around 0.45 or 0.5. So the amount of energy that these systems generate is much lower than what a nuclear power plant can generate. So when we define the carbon footprint in terms of the emissions divided by the energy output, the denominator is very low in the case of renewables compared to nuclear, for instance, which makes the ratio higher.
Okay, so we also have some comments and a question from Dirk van der Ven. He says, when comparing to fiat currency, it's more logical to compare to the digital trade of fiat currency, not paper currency, which are likely being on its path towards extinction anyways. You mentioned that when the price of Bitcoin would be 196K, the emissions per value would be equal to gold. However, I've understood that if the price of Bitcoin increases, so does the energy consumption for each unit. Therefore, wouldn't the carbon footprint be diverging further away from gold as it gets more expensive?
Professor Avci, would you care to answer, or
No, I think,
this one as well?
no, please go ahead. You're the expert on this.
Well, I will be honest, I'm not an expert on blockchain technologies, but as far as I know, the energy consumption for Bitcoin is not relevant to its price. So the energy consumption for mining one Bitcoin wouldn't change with the price of Bitcoin. Therefore, I guess it would not be diverge. It would not diverge. So that's what I think.
Could you please clarify whether 160K US dollars is environmentally fair price for Bitcoin? How did you measure this amount? Could you please briefly discuss this point again?
Well, I mean, I wouldn't say environmentally fair, but under the current circumstances, with the current technologies, with the current amount of energy required for one Bitcoin mining versus the current inputs for gold mining, we found that over the life cycle of the two commodities, the value of Bitcoin should be around 196,000 US dollars, so that Bitcoin and gold would have similar environmental impacts, or at least similar carbon footprints. So 160K, according to our methodology, is not enough. It should be slightly higher, around $196,000. So basically, how we found this amount, let me tell you. We used that software which I have shown earlier called CCalc to calculate the life cycle impacts of Bitcoin and gold. And then basically we calculated the amount of gold, and the amount of gold can easily be assigned a certain value. So 1 ounce of gold or 1 gram of gold, however you define it. So it was very easy to go from the amount to the value in the case of gold. So we determined the environmental impact of gold per unit value. And then we used this value as our benchmark and then calculated what should be the value of Bitcoin so that gold and Bitcoin would end up with equal carbon footprint. So that is how we came up with that value of $196,000.
Okay, so we have another comment from Bassem Alassi. It's the purpose of mining gold is to extract gold, while the purpose of mining Bitcoin is not only to extract Bitcoins from the system, it's also to secure the transactions of a decentralized payment network. And then we have an additional comment from Dirk Janderven. The deflationary style of Bitcoin assures that if the price of Bitcoin increases, it is worth to invest more computing power to mine a Bitcoin, and as such, the energy consumption increases.
Thank you for this clarification. Well, what we did was we used actually average values as reported in the literature. We did not have, obviously, the chance to actually mine a Bitcoin ourselves and then measure the amount of energy required for Bitcoin mining. So we got the average values from the literature for mining one Bitcoin. Obviously, it changes over time, as you said. Working with average values may save us, but if it's such a dynamic relation between the price of Bitcoin and the energy consumption, what we can do in the future is, and this is something that we can take into account further, but we can do something that is called consequential LCA. What we have done is called attributional LCA. Now, this is a bit too much environmental engineering, but in the case of attributional LCA, basically you study the current situation. In consequential LCA, you study what ifs. So we can analyze the change in the energy consumption in terms of or as a function of change in the price of Bitcoin, and then we can estimate how much it will be in the future, and then we can create our model accordingly. So we would like to thank the member of audience, Dirk Jan van de Ven, for this interesting question and following comment, and we will definitely take this into account in our future analyses.
Maybe, can I ask you a question? I know that you're not the only one who's doing the study in this life cycle assessment. So what is the scope of the research that has been done? It would be a good idea for the audience, I think, to get an idea of how much this is being looked at from the LCA point of view or other means when people want to gauge the environmental impact.
Well, I mean, at first, when I decided to analyze this point, I was expecting that it would have been done by that point. I mean, I just started looking into the literature, and I found out that there is a gap in this topic. People discuss the environmental impacts of Bitcoin, make comparisons to different products or services, but what they do is they always look at the energy consumptions, or at best, they consider the carbon footprints or other environmental impacts caused by the production of energy that goes into Bitcoin mining. So there was no study that uses a life cycle approach. So that is what made me think that this could be a significant contribution to the existing literature. By incorporating a life cycle approach into this analysis so that we can see the bigger picture. Because if you look at only the energy consumption, then you overlook the other inputs for the process. Now, I'm going to be honest, as far as Bitcoin mining is concerned, the biggest input is the energy itself, but it is not the only input. So that is why life cycle approach was quite original and beneficial in that sense. So if we can make some additions to our work, as we have mentioned earlier, and as the members of the audience have very kindly suggested, I think this will end up a very original, very pioneering study.
Thank you very much, Görkem.
All right,
Thank you.
I think that wraps up the questions, unless either of you have any closing comments to make. No, okay. IAEE wishes to thank both of our distinguished panelists for an outstanding webinar. This webinar will be available on IAEE's website for future download. If you're not a member of IAEE, we welcome you to join by visiting www.iaee.org. We thank you for attending, and I officially close this webinar.
Thank you. Bye-bye.
Have a nice day. Bye.